This is a black eye for Twitter. And I think right now, if you look at social media, definitely a bright spotlight on any issues like this and any types of cyber hacks, especially in this period. It's something that's unnerving, not just to advertisers, but consumers. So I think the jury's still out, but definitely a black eye for Twitter in terms of this latest incident.
I was just talking about the performance of the broader tech stocks, and it has clearly been stunning as investors have been motivated towards these so-called growth and defensive names in the market. But if you look at what's priced in, I know around Netflix, many are saying, well, a lot of the long-term earnings and optimism is now priced into the stock, and nobody's even looking at some of the negatives potentially around competition. Same story around Facebook. We know this is a huge advertising model, yet advertising has fallen off a cliff. So what do you make of how earnings season will match up to some of the expectations in the stock prices?
Look, I think it continues to be, when you look at especially FANG names and tech stocks, we see this move another 20, 30% higher, over the next year. And I think part of it is the stronger getting stronger. If you look at a lot of these trends, streaming, e-commerce, cloud, and some other areas, these stories are getting accelerated by 2-3 years in terms of the pandemic. And if you look at some of the near-term numbers in terms of 2Q, I think it's a shrug the shoulders type quarter. I think many investors are looking past 2Q to the other side of the dark valley. That's why the valuations and I think the re-rating in tech continues to go higher. There's a lack of secular growth stories. That's why, in my opinion, FANG names, tech stocks, the path's still higher despite this parabolic run.
It's extraordinary, isn't it, when you take a look at Amazon stock, 62% higher year to date. What do you make of some of the analysts looking for different acronyms away from the FANGs? I heard the SMARTs the other day. Some of the other companies are further down the rung in the technology sector that may benefit from remote working and some of these newer trends. Do you think there is enough interest, enough momentum in some of the smaller names away from the FANGs?
Look, I think what you're starting to see is a little more rotation to broader tech across software, cybersecurity. You look at the work from home trends, that's not going to really be slowing down. Next 12 to 18 months, it's an acceleration. But as much as you want to talk about a Zoom, a Slack, a Citrix, some of the core names, it's really the hearts and lungs, the cloud infrastructure that's really building that out. And really Microsoft's the one front and center that's benefiting there on the large cap side. And I think what you're really starting to see here is 30% of trends today, if you look at workloads, are in the cloud. That's accelerating to 55% in the next 2 years. That is putting massive fuel in the tank of tech. And I think you're seeing that spread, which is why I believe it's FANG names that lead it. But ultimately, software, cybersecurity, even chips will participate in going into the rest of the year.